What's up, everybody? This is Misael Gonzalez. You're watching Wall Street Saturday, a show about God, investing, and stocks. Our show is for educational purposes only. We're not financial advisors. So go ahead and enjoy the show. Share it, like, subscribe, and hit the notification bell to be notified every time a new video comes out. Thank you.
Hey, what's up, everybody? Thanks for joining us for another Wall Street Saturday. We know it's been a minute, but it's November the 12th, 2022. We got some exciting things going on in the markets lately that we want to bring to you. But before we get too far ahead, I just want to say, hey, I'm Josh.
Hey, Misael Gonzalez.
And I'm Joshua Trusty. Before we get into everything, I'll just open us up with a word of prayer. Dear God, thank you so much for waking us up this morning and just giving us, once again, the gift of life. We never want to take that for granted. And we thank you so much that we get this chance to talk, meet together and share about what's been going on in the market. I pray that you would help make our conversation informative. I pray that you would help us to figure out exactly what is best to share with the viewers and what's best to, what's the information that will be most helpful to everyone and help us to better position ourselves for the future and be better stewards of the gifts that you have given us. In Jesus' name I pray, amen. All right, so it's been quite the week in the stock market. Just here's a quick overview of some of the things numerically that's been going on. The Dow Jones Industrial Average closed this week up by 4.1%, bringing it up to 34,000, so at 33,748. The S&P 500 closed just shy of 4,000, and it's up 5.9% for the week, and that brings the year-to-date loss around 16.2%. The Nasdaq has closed up 8.1% over the past week, so that's at 11,323, and the 10-year Treasury yield has gone down by 0.3% this past week, and appropriately, the bond market has gone up by 2.3%. Some of the really important highlights of the past week include inflation data coming in at 7.7% versus the expected 7.9%. Stocks were up substantially when that happened. I know I definitely saw deep green across the entire board for my portfolio. And then there just also there were some other information going on, or other things going on with regard to the crypto world with FTX. There was also the election that occurred, and that influenced stock prices. So overall, there's been a lot going on in different sectors of the markets and also macroeconomically as well. And so we're just going to touch on a few of those different things today and just give you our thoughts on them.
Yeah, speaking of that inflation rate that's coming in at 7.7%, obviously the market really liked that. I think on my personal portfolios, I was up 10% on one day, which was crazy. I think on that day, the S&P 500 closed over 5%. Obviously, we're liking the 7.7% that beat expectations. We thought it was going to be a little bit higher, but with that, I kind of had a hunch that was gonna happen. I didn't think it was gonna happen, but I had an idea that it was because I actually saw the IBonds. IBonds changed their return rate from 9% to 6%, which is crazy, right? That's a huge decrease, around 3%, right? I'm doing those numbers right. I'm thinking about those right. But so I thought that was a little strange that they actually announced that about a week before they released this CPI the data, So the question really is for us here to talk about is, do we think the market is overreacting? They had an FOMC meetings not this past week, but the week before, November the 1st through the 3rd, or somewhere around those dates. And Jerome Powell had this comment that I thought was really interesting. And I was actually going to piggyback off something that I heard from CNBC, I think it was a Harvard professor that was on there speaking. But Jerome Powell actually had this comment about why he's doing what he's doing. Raising the interest rates despite all the turmoil that's going on in the general market here. He had this comment about how he wants to over tighten with the policies so that when a recession does come, they can loosen the grip that they have. And so what this Harvard professor had actually mentioned, he mentioned that when inflation goes higher, they know what to do, right? They know that they can increase the interest rates. But when a recession comes, they don't know what to do. So that's why I'm not saying there's going to be a recession in 2023. Maybe we're already in a recession, I think, by some people's definition, right? By the, majority definition, right? When you have 2 quarters of declining GDP, right? That's how some people define a recession there. And that's definitely happened. And I think this third quarter, I forgot what the numbers were that happened in October at some point. But yeah, I guess the Fed in a way is almost preparing for a recession. Obviously, when a recession hits, they're going to lower those. So my thinking is, despite us having this really great news and people thinking that the Federal Reserve will stop raising interest rates, we have Thanksgiving coming up here in a couple of weeks. We have Christmas coming up, which is going to be a really, really big spending moment for everybody. So I just think that the inflation is actually just going to get worse, continue to get worse. And I think they're going to continue to raise interest rates. So let's enjoy like the riffs. I think that's my strategy, right? I think a couple of weeks ago, I don't know if it's been recorded, but it's like I think we said buy the dips, sell the rips. So for a short-term investor, I think that would be probably the best thing in my mind, in my opinion. For us long-term investors, obviously it doesn't really matter when you buy. Obviously, you just want to continue to buy on a discount. But I don't know if you guys have researched or thought the same, but if you guys had any opinions on that. But that was just
All I
my.
gotta say, all I gotta say is research shows that a big chunk of someone's return in your portfolio comes in an average of 10 to 15 days. So that is to say that if you had exited the market before the 7.7 inflation report, you would have missed, like Josh was saying, at least 10%. But the fact is that most of the return in your portfolio, in your investment portfolio, is going to come from maybe 10 to 15 days that we'll see a rally like the one that we saw when the inflation report came out. That is to say, timing the market is a terrible idea. Staying in the market the whole time is how you can catch and benefit from these kinds of rallies. And otherwise, if you exit for some reason, you may have probably missed, a big chunk of the return that you're going to get over that year. So it was just something to remind ourselves that we need to keep ourselves invested as long as we can.
Yeah, and I think like with the S&P 500 being up by over 5% over the past week, I think that just goes to show how sensitive the stock markets are to different predictions and what the Fed rate is going to be. So, for example, there are different websites that show what the stock market thinks about what the Fed rate is going to be for the next decision, which is going to be around December 14th of this year. And so, for example, I'm looking at investing.com, and they show that the target rate of 4.25 to 4.5% has now an 80% probability of being the target. And in the previous week, before we had this inflation data coming in, that was around 61%. So that's an increase of, I guess, depending on how you want to calculate it, either 19% or an increase of roughly 33%, because it's going from 61 to 80%. But overall, that's a significant change in the valuation of the overall stock market based on just that one probability. So I think the markets are sensitive to that, and I think overall stocks have been beaten down like more than is fair. So overall, the stock market is kind of like recovering some of the just like almost like insane losses that have been incurred over time. And there were even articles over like the past couple of weeks talking about how the market was just really low liquidity, and because I think people are just like running out of money to invest. And at this point, I think with such big news happening at a time of lower liquidity, well, it's more easy to see like the markets respond strongly to positive inflation data, which is also fundamentally important for the valuation of these stocks, since the 10-year yield and like the treasury goals that have been set, that are set by U.S. Federal Reserve, are going to have fundamental impacts on the economy. So I think I think that change is, or that increase in value is fair. I think it's contextualized by the amount of like low liquidity we've seen in the stock market over the past couple of weeks. And I'm hoping that it heralds a new bull market, but it's too early to tell at this time.
Yeah, I think the other thing that's really kind of feeding in that is the jobs report that's been going on. That's just one other thing that I've been kind of looking at and kind of monitoring. And I always take note of when my phone pops up of some of the layoffs, you know. Some of the nuances, of course, like Elon that just got Twitter here, and it seems like he's been doing some really fun things with that. Fun in the sense of culturally, not literally, but yeah, and so I noticed that he laid off about half the workers at Twitter. You know, they're probably just sitting around, maybe doing nothing or whatever. He's a businessman. I'm not gonna like question his business, and he has a right to do whatever he feels is right for his business. But I did see that Facebook was laying off a lot of folks too, and I know that makes Jerome Powell happy, right? Because he's always saying that the big issue is that people are working too much. And again, that I see his simple math of how more people and more payroll expense can lead to higher prices. But that's just another thing that I'm kind of looking out for, as we have already had our report earlier this month, but the next report for November should be in early December, and I can check when those numbers are, but I don't have it handy on me. But that's the layoffs and everything are just something that I'm kind of like looking out for too, because that's a really big predictor of housing, right? Obviously, when people can't pay their mortgages, and that obviously leads to a large debt default. So that's just something that something else that I'm kind of looking out for. I don't know if that's something that you guys too have been kind of following, or if you guys care, you guys think it's a concern or anything.
I think it's a concern for me, mainly because in Zuckerberg's note to investors, and also like the employees that he had to let go, he mentioned that he was sorry because he had invested too much into Meta, and he basically said that he thought that all of like those gains that they had incurred during the pandemic would persist, but they haven't.
Mm-hmm.
And that kind of makes me wonder if there's going to be reverberations of that throughout the entire tech sector, as maybe companies realize that some of the pandemic behaviors that were observed just don't stick. I mean, it was obvious that this wasn't going to happen with some companies like Zoom. I am going to begin like doing some research to see like to what degree can these longer term or I guess what significance is the pandemic gains that the tech sector had, and are these to what extent are these going to persist?
Right.
And it made me just like Zuckerberg like covering up just poor business decisions that are specific to Facebook.
Well,
but I do wonder like
I
how
think
much it applies across industry.
another downside to Facebook is that Facebook, the majority stakeholder is Mark himself. So if there were any possible good ideas out there that Mark didn't agree to, he didn't have to follow at all. So he's running the whole show, right? Who knows if this Meta thing is the right idea? But if it isn't, and somebody else can't really do much about it, I mean, it's just like a recipe for disaster. So
yeah, and it's going to be even harder for them to get like more funding, since right now like the Fed is raising interest rates. So they're definitely feeling like the pain of burning through all of that cash as they continue to try to build out an entirely new source of like revenue that will affect, well, in their minds, it's going to affect everybody across the world as we try to see like what the metaverse holds for us. But
Yo,
Go ahead.
I was gonna say, man, I think that you brought up Kramer and like something really interesting. It reminded me of some of the case studies that I used to do in school, back when I was at KU. Um, it kind of reminded me of like this like Segway. You remember those Segways? Like those little
Ah,
two-wheelers that
yeah,
you
yeah,
used to
yeah.
ride on? Yeah, so obviously those aren't very popular. Not to say like people don't use them. I mean, you might see them in movies like Mall Cop or whatever. But but yeah, so I mean, this is kind of like random really, but still just kind of interesting. But you mentioned this quote from Kramer that, you know, they built all this money into something that doesn't have a business model, and I'm sure that we're probably all referring to this virtual reality world there, you know,
The
with whatever,
metaverse.
yeah, the metaverse here, which may or may not be like a good idea. I know it's really interesting and like a lot of folks are really into it. It's probably going to be used a lot for like gaming and stuff like that, but I know that Mark Zuckerberg's been trying to make it more commercial like so that companies can you know, be more like face to face, cartoonish maybe. But but yeah, I mean, going back to like this Segway thing is that they created this product without actually doing any research on it. And so the research they were missing was just like the infrastructure of like a city, right? Like, can a city even have these kinds of things? Like, what are they going to do about insurance? What are they going to do about parking? You know, all this kind of stuff that they didn't actually think about. And to your point, could this possibly be a poor business decision, right? Did they do their research? Do companies actually want to have a cartoon like a conference room, right? Like, so I mean, I don't really know the specifics of it. I don't know the meetings that they have on a daily basis or however often they get together, but just something to think about as far as like entrepreneurship. I know that's not necessarily the gear of our discussions here, but to be an investor, you know, you got to think like an entrepreneur, right? But just a fun thing that kind of reminded me of. But
Yeah, and actually, all of this, just to tie it all up in a nice bow, reminds me of one quote from like Henry Ford. I'm just going to paraphrase it, but he basically said that if I had asked people what they wanted in the context of like the Ford Model T, he said like they would have asked me for faster horses, and instead he gave them a vehicle that had like the horsepower of like a herd of horses. And so I think like Zuckerberg like is trying to create like something brand new, and he doesn't. It's not something that we necessarily asked for. It's definitely bold, but only really time will tell if it's something that we're actually going to use. If there's really a solid business model for it. He certainly hopes so. But for everyone out there, investing doesn't have to be like a shot in the dark when it comes to, or even just like a huge experiment. You can just invest in a broad variety of different stocks to hedge your bets. And one of the best things you can always do is just to like hold your positions for a long time, so that way you can ride out any uncertainties in the market. Like maybe you have invested in an ETF that's invested in Meta, and Meta's not doing so well right now, but over time, generally speaking, like stocks do go up, so you don't have to worry about all of the little waves that occur as part of just riding out the stock market. In essence, now more so than ever, we implore you to stay long and stay green.
Hey guys, thanks for checking out the video this week. If you haven't already, please like the video and subscribe to the channel. Every week we're going to be uploading a couple of videos every Saturday of opportunities that you can take advantage of in the markets. Thanks again and have a happy trading week.